is a nice segue. So if when I win the 1.9 billion jackpot, who's going to help me manage that? So I've got a couple articles here. One of the articles is an attorney that the article says, after you hit the jackpot, quote, don't do this, says Philadelphia lawyer.
Yeah.
So I wanted to talk about that and see what your input was on that. And then in the same vein, another article from CNBC, Powerball's 1.9 billion jackpot is the biggest ever, but Mark Cuban and Kevin O'Leary disagree on what you should do if you win. So let me just say, this is the easier point. Mark Cuban and Kevin O'Leary, both judges on the Shark Tank, right?
Yep.
Mark Cuban says, take the annuity, take the 50 mil a year paycheck. Certainly if you're under 40, and it will help you not spend all of your money, before you die, kind of thing,
Yep. Sure.
Kevin O'Leary says, take the lump sum. It's your money. Give yourself a paycheck that you can live by, and then use all that cash to invest it and grow it. What do you think?
Well, so that's one of those interesting things that's, you can spreadsheet it out, or you can do dollars and cents. And I think if you run the dollars and cents, the lump sum makes sense. But there's a whole emotional and psychology. I mean, we know, seeing the numbers about the amount of people that win the lottery end up broke or bankrupt or all that kind of stuff. And you see it in athletes and, childhood
MC Hammer.
actors. Yeah. So you have to kind of be honest with yourself if that happens. I think when you get to a number that big, I would agree with the annuity, even though you might end up with less money in the long term. It's like, man, just you get that for 30 years, and it's more than you're ever going to spend anyway.
50 million a year.
Yeah. I mean, that's crazy. So, just to kind of save yourself from yourself, it's probably not a bad idea, just because the number is so large. If it's something a little bit less than that, I mean, when you get around 10 million, it's like, boy, I don't know. That's kind of the break point.
Do you have any knowledge as to what a sort of succession plan is for jackpot winners like that? Like, if you were to take the annuity and you died in 3 years, does the state just make out like a bandit, or does your estate have entitlement to the annuity?
Yeah, that's a good question. So a lot of times it's almost like getting a pension benefit, where you'll get, the number will be this single, and then they'll do like a single person, and then your spouse will get 5 years after you die, or spouse permanently. So when you get a pension, usually it has those options in that. I don't know if the lottery has that. If they don't, a lot of times what people will do is take some of that initial payment that they get, that 50 million the first year, and then use that to buy some life insurance to guarantee. So you can say, all right, if I die in 3 years, we want to make sure, my spouse is taken care of, and that kind of stuff. So you kind of play with those numbers and figure out what the best way to do that is.
One of the don'ts that this article from Philadelphia, this lawyer from Philadelphia says, is don't sign your name on the ticket right away,
right,
unless you know that the government isn't going to publish your name. But anecdotally, I think I've read that in many cases, the best thing to do is to sign the ticket as an LLC that your newly appointed or newly hired attorney has formed for you, to allow you to remain anonymous. But is it also so that because the LLC doesn't die, so therefore the LLC can then benefit from the virtue of the full annuity? Do you think there's something to that?
Yeah, there could be something there. And
it'd be a bummer if the kids missed out on 1.9 bill if you die after a couple of years, and
or they knock you off thinking that they're going to cash in on it, and then they don't get anything out of it anyway.
Right.
There'd be some pretty significant estate planning around that.
What would you do if you got a call from an employee that said, "Hey, I just won 987 million on Powerball, so I'll be withdrawing from my my plan that you administer"?
I think that would probably be the least of their concerns. But no, I would say make sure you have the ticket in a secure location. right? So even if you're not going to do anything for a couple weeks or two, or go to the bank, get a safety deposit box, put the ticket in there, do some online research,
Don't tell
find
anybody.
find the attorney first. Yeah. Yeah. Did you see the guy that won, that collected his winnings in the mask because he didn't want his family to know? He had like a big like bunny
I didn't
hat
see that.
costume or
No.
something. Yeah. And it wasn't even that. I mean, it's all relative, but it wasn't even that much. He won like, I don't know what it was. I think it was like 150 grand a year for 30 years or something, but he didn't want his family to know. But yeah, I mean, and I think it depends on the state whether they make your name public or not. So
Yeah, I think you're right.
yeah, so I don't even know what the rules are in Connecticut. When I cash in my little $3 scratch off tickets, I said it's fine. Let the world know. Come
Right.
at me.
So that's all I was bringing to the table today. Any other kind of parental words of wisdom to the jackpot winner from an investment standpoint?
Yeah, I mean that would. Yeah, I mean, I think the whole idea of do nothing for a year probably isn't a bad idea. And even if you get the lump sum or the annuity, just do nothing. I mean, maybe pay off all your debts, and even pay off your house if you want to, and then just do nothing for a year, and kind of hang out. I think that's probably even what I would do. Is just, again, depending on the dollar amount, but we were discussing with my wife if she'd finish out the school year. I'm like, man, you got to finish out the school year. That's just kind of a
Right, she's a
rough thing
teacher,
to
so
do.
she's not going to leave the kids high and dry. Well, let me ask you
Yeah.
this, because this will put our feet a little more on terra firma. Um, certainly most of our viewers out there, all 19 of them, will likely not ever be in possession of 900. I think the take home on a lump sum was like 900
Mhm.
million on 1.9 after taxes. So, um, you don't deposit a $900 million check at People's Bank, right? I
Yeah,
mean,
that's true.
and that's not rhetorical. I'm asking you, right? You're the money guy.
No,
You're on the show. You don't take a $900 million check and go to Nutmeg Federal State Credit Union and deposit that, right?
well, no, and you have to think about FDIC insurance
Well, that's
and
what I'm
and
saying.
SIPC and all that sort of stuff too. So,
But you certainly
um,
don't find 100 banks in a 100-mile radius and put a million in each of them, right?
no, I mean, you have different limits with the spouse, and maybe that's another thing with the LLC too. You can, um, I mean, I think at that point you'd probably sign up for some sort of direct deposit, or maybe it's wired to somewhere, or probably set up a few different accounts. But
Well,
um,
that's literally my question though.
yeah,
Like I guess the risk, so FDIC insurance for the viewers out there is what, $100,000 insurance policy against your bank going bankrupt, right?
right. Yeah,
Or
250 now,
is it
250,000.
really 250 now?
Yeah, yeah.
So, okay, so maybe some 80% of the populace doesn't have more than $100,000 cash, right? So
Mhm.
so that's a pretty good coverage. But then you have like this uber wealth, right? So like I said, you don't put $900 million in a checking account at Nutmeg Federal State Credit Union, right? I mean, because that's
Yeah,
probably more than their entire
right.
asset pool, right?
You're right. Yeah, they wouldn't be able to handle it. Yeah, I mean, you got on a joint account, so it's per depositor, so you end up with 500,000. So
It's like some different realm that only like
yeah,
1% of people can understand, right?
yeah.
I mean, is that where the Charles Schwabs and these like major New York, Manhattan banks come in because their deposits or their assets are so gargantuan that like you are then protected if you have 900 million with one of those outfits, the likelihood of them going bust on your back is low.
Yeah, I mean, we went through that with in the financial crisis. You would think that, but
But
if
then
you have a
Lehman
brokerage,
Brothers went bust anyways.
yeah, if you have in a brokerage account, you have SIPC, which is a Securities Investor Protection Corporation. So you probably seen that sign and whatever, but that protects. So if you think about a brokerage account, you're buying mutual funds, you're buying ETFs, you're buying stocks. So let's say, for example, you have a Schwab account and something happens to Schwab, you're still a registered owner of those securities. So nothing really happens to those
Got it.
securities. your issue would be your uninvested cash in the account. So,
Okay.
there's always people with brokerage accounts. There's always a little bit of extra cash hanging around there.
Right.
So that would be your issue.
Got
Charles
it.
Schwab's also a bank, so you have FDIC insurance there. And then there's also brokered CDs, which are, if you have a brokerage account now, you can, instead of in the old days when you'd run around to every bank in town and buy CDs at every bank, you can go in a brokerage account and buy 250,000 from this bank and put a CD that 250,000 from this bank. So you can structure that all under one umbrella through a brokerage account. So and we do that for clients now, not because of the size of their assets, but just because different banks pay different rates and whatever. And you go in and you say, oh, ABC Bank in Seattle, it has this, CD rate for 4 years that they're running a special on. So let's go in and buy that sort of thing. So, so I guess that's pretty much how you structure it. I've never dealt with a lottery winner in full disclosure, but yeah, it'd be interesting, and what would be interesting about that is for somebody like me, how would you even bill somebody like that? I mean, you're not going to bill them on assets. I mean, because you get to a certain point, is it that much harder to run 100 million than 50 million? Probably, or that much harder to run 100 than 50? Probably not. So you're not necessarily going to charge them. So you probably have to put some sort of cap on it and all that kind of
Point
stuff. So,
0.0001 is
yeah,
still
I know, a 1
100 grand
basis
a
point
year.
or something. But yeah, so yeah,
That's cool.
interesting stuff.
Thanks for letting me pick your brain on that. So
Yeah.
that's what I wanted to bring to the table because it was relevant in the news cycle. What do you got for us today?
Well, it's funny actually. My story was pretty similar in a way. So this is talking about Binance. They bought FTX, which are two of the biggest cryptocurrency players, and this plays into what we were just talking about. So FTX had, quote, a liquidity crunch, which is basically one of the worst things you could have as a bank or brokerage or even as a business, where they don't have the ability to pay people out. If you think of,
Right.
kind of It's a Wonderful Life or something like that, right? Everybody's trying to get a run on the bank or whatever. So Binance came in and, basically they just got together and Binance said, all right, well, we can help you out here. So kind of interesting the way they, and I'm just going to share this quick here because there's a tweet I think here that's kind of funny.
Now I'm at I shouldn't say this for security, but I'm going to say it anyways. I'm at Coinbase. Is that one of those? Is that like
Yeah,
Binance?
Coinbase is a big one. So this was this was the head of Binance. He says this afternoon FTX asked for our help. There is a significant liquidity crunch. To protect investors, we have signed a non-binding letter of intent to fully acquire FTX.com and help cover the liquidity crunch. We will be conducting a full due diligence in the coming days. So this,
When
when I read this basically reminds me of the financial crisis, thinking back of '08. I remember I was down in Philadelphia. I went down there to watch the Brewers play. It was kind of the end of the season. And I remember driving back on a Sunday night listening to Bloomberg, and it was, this bank's going to buy this bank, and this bank, it was,
Lehman Brothers was
JP Morgan's
on
going to step in and buy Chase and all that sort of stuff. And it was crazy. But this is, an example of it happening on a small scale. So people who are not, following this stuff, they say, oh, this is another crypto thing. And here's, crypto not being the adults in the room or something like this. But this happens with banks. This happens with, brokerage houses or,
they oversold the restaurant, right?
yeah.
There's no
Yeah.
food in the freezer.
Yeah. So you go back to, 87 long-term capital management with the stuff they were doing. And you go back to, Bear Stearns and Lehman Brothers. And so this can happen, but it looks like it's been relatively,
What's the date here on that?
yeah, it hasn't really affected I woke up and I was looking at some of the crypto stuff, which is weird that I don't normally look at.
Brian, when was the tweet? When was this in the news cycle? Was this morning?
Yeah, let's go back to see when that tweet was.
Like this dropped today?
Yeah, I mean,
or
this story is as of
November
today,
8th?
11:30.
Oh wow, this is just developing.
Yeah, yeah. So there were issues, I believe, overnight, because when I woke up and looked at some of the crypto stuff, I was like, why is crypto down so much?
How's your crypto doing? Is the whole
I have very, very little crypto. and mine is just through my regular brokerage account. But yeah, I mean, it is the lead story on CNBC.com. And this says
Wow.
Bitcoin surges $1,300 after Binance and FTX reach a deal to fix liquidity crunch. But
That's interesting and in its own.
well, it is, and it's a bit of a misleading headline. Yeah, see, Bitcoin drops 9%. So they're talking about how the headline is about how it's up, but they're because it's a quick headline, they're not talking about how much it was down before.
Right.
So that's been pretty interesting. And then at a related, Fidelity is now going to offer Bitcoin access and crypto access in their 401k programs. For Us All was a company out of California that launched it earlier this year, kind of just honestly just to grab headlines a little bit, because they're not a big 401k shop, and you still need, it's not implemented automatically in all plans, so you still need the business owner to say, yes, this is a good idea, and then you need employees to say, yes, I want this feature. And then even still, they capped it at 5% of somebody's account balance, so it's not really moving the needle that much. But now Fidelity is kind of in that mix as well. So it's interesting. We've never had something like that in the 401k world, where they'll add it, but they'll say, we're going to limit this amount
Right.
that you can access. So
Interesting.
yeah, that was a pretty interesting story, I thought.
Yeah, that is good. There was what about what about DeFi, or I don't know if that's a term, DeFi, decentralized finance is, I guess, the acronym. But what am I trying? The point I'm trying to make. The digital dollar. Do you have any information on what the U.S. Treasury is doing with their crypto dollar? Have you ever read about anything like that?
Yeah, nothing recently. I know that was a topic for a while, but I think they've been so busy, um, through COVID and through interest rate stuff and going up and down. I don't think it's a big priority for them right now.
Right.
And Bitcoin is actually, if you look at it over the last few months, it's really been
Is it
kind of a
tied?
boring asset class, which is probably a good thing as it matures. But it kind of found that floor around 20,000, and yeah, sometimes it goes to 18 and bounces up to 22. But it's kind of hung around there around that 20,000
Right.
range for a while. So
Hmm. Good stuff. Good stuff. Well, I think that. Do you have any more meat on that bone, or do you have anything else
no,
you
I
want to
think that
share?
was just a story I thought would be pretty interesting. I will throw out there, as we record this on election day. So from midterms till the end of the year, the last 19 periods like that have been positive. So you'll see articles like, well, whoever wins and who takes over the House and the Senate is going to drive markets. But this is leading into the midterms from January to early November is typically not a very good year for the markets, and obviously this held true this year. But then from midterms to the end of the year, the market typically does pretty well. So just
So
something to
you're
think
saying
about.
you
Not a
so you're
guarantee,
so
but
you're saying generally from the election day to the end of December, the market experiences an uptick.
yes, and that's doesn't matter what the results are, whether it's kind of um, a sweep by one party or a split
Right.
between Congress and the White House. It's just kind of like into the uncertainty of the first 11, 10 months of the year. Um,
And that only really matters if for those people who are trying to time the market, right?
right, right. Or it's kind of a feel good exercise for some people. Now that you're like, well, we've had a rough year, you can be like, well, from now until the end of the year, blah blah blah. But
I
you throw
wonder.
those data points out there. It doesn't matter whether it's 19 out of 19 or 49 out of 49. It's going to be broken at some point, right? I mean,
Right. I
that's
wonder
just
if that uptick in the market is people trying to max out their retirement funds for the year, and all the we see a splurge in buying at the end of the year because
Mhm.
people are trying to spend off the books. So
Right.
maybe just and then of course you have holiday shopping. So um,
Advertising's a big one too.
all
People
around the
spend that
market
then to
activity, yeah,
yeah, you get
economic activity.
the proverbial Santa rally, right? So from mid December till the end of the year is a pretty common occurrence. But
Cool.